Okay, wow. If you look at the chart for CleanSpark lately, you kind of have to ask, right? Are they mining Bitcoin? Or is this thing fueled by rocket fuel? The trajectory is just wild. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into the electrifying story of CleanSpark, ticker CLSK. And just for context, we're using data captured this morning, September 19th, 2025, around 8:29 a.m. Eastern Time.
Right. And before we jump into CLSK itself, maybe just a quick look at the broader market.
Good idea. What's the mood?
Well, our research shows pre-market futures are leaning slightly positive, NASDAQ leading the pack. But there's definitely more chatter about the R-word, recession, mostly driven by signs of slowing demand for workers.
Ah, okay. So it's sort of cautiously optimistic, maybe.
Exactly. That's a good way to put it. Cautious optimism.
Okay, so let's unpack CleanSpark then. Because this recent surge, it feels like it's way more than just Bitcoin prices. There's a real narrative here.
Oh, definitely. Our research flagged like a trifecta of potentially game-changing news items driving this.
A trifecta. Okay, lay it on us.
First, you've got this geopolitical angle. The CEO has been talking about a potential U.S. bill for the government to actually buy 1 million Bitcoin.
1 million. Wow. Okay, that would be massive.
Yeah.
For the whole sector, obviously.
Huge catalyst, yeah. Second, you're seeing institutional money starting to pay closer attention. We saw one major ETF manager just increase their stake by, over 17%?
Significant.
Yeah.
But isn't the really big story that strategic pivot they're talking about?
That's number 3, and arguably the most important driver, especially for the institutional interests you mentioned. They're trying to shift or maybe expand from just being an energy-hungry Bitcoin miner to leveraging all that data center infrastructure, the power capabilities for high-performance computing, for AI workloads.
That's the narrative, not just mining, but genuine revenue diversification using their assets. It's smart.
It's a very compelling story. And look, it's clearly working on analysts. 11 out of 12 have a buy or strong buy rating right now.
Okay, and this is where it gets really interesting, isn't it? Because while that story is red hot, our own numbers paint a different picture.
Precisely. This is the core conflict we found. That narrative is powerful, no doubt. But our fair value model, when you really dig into the numbers, the high capex, depreciation, the reliance on volatile Bitcoin prices, it comes out with an intrinsic value around $9.68 per share.
$9.68. And the stock's trading well above $13 as we speak.
Exactly. So that's a huge premium the market's paying right now. Basically, it's pricing in a lot of future success from that AI pivot already. Screams overvalued based on current fundamentals.
That valuation gap sets up this fascinating tension. We call it a powder keg in our research notes. You've got strong forces on both sides. Let's look at the bulls first. Options market.
Overwhelmingly bullish. The put-to-call ratio is just 0.21, super low.
So for every one bearish put bot, almost 5 bullish calls are being snapped up.
Pretty much. And they're really congregating around that $20 strike price. So very optimistic targets.
Okay, but then you flip the coin. The bears.
And they are not insignificant here. Short interest is sitting at 19.4% of the float.
19.4%. That's formidable, right? That's a big, committed group betting this rally fails.
It's exceptionally high, yeah. Means there's a lot of conviction on the short side. But it also means, potential fuel for a massive short squeeze if the bulls maintain control.
Right. Squeeze potential is definitely there. Okay, so cutting through the narrative, the valuation, the sentiment wars, what's the chart itself telling us? The pure technical picture?
Technically, it's pretty unequivocally bullish, actually. The stock recently broke out of a consolidation pattern very powerfully, and crucially, it happened on a massive spike in volume.
Oh, volume confirmation. That's key. Shows real capital flowing in, not just noise.
Exactly. It confirms a new major uptrend is likely underway. However, and this is an important caution.
Well, that's a catch.
The momentum has been incredible, almost like escape velocity. But the RSI, the Relative Strength Index, which measures that momentum, it's now deep into overbought territory.
Okay, so technically strong trend, but maybe stretched thin in the very short term. Needs to cool off a bit.
That's the signal, yes. It suggests the stock might need to pause, maybe consolidate these gains before potentially making another move higher.
Got it. So let's try and tie all these threads together. You've got the powerful AI narrative, the big valuation question mark, the bullish options, the huge short interest, strong technicals, but maybe overbought. What's the strategic outlook? What's the verdict from our research?
Taking everything into account, our official verdict is cautiously bullish.
Cautiously bullish, okay.
Yeah, the fundamental narrative, especially that AI pivot and the potential, even if speculative, government BTC buying, it's just too strong to ignore right now. And it's backed up by that technically picture-perfect high-volume breakout.
But the caution comes from?
Primarily the risks we've highlighted. That stretched valuation is a big one. That 19.4% short interest is a serious headwind if sentiment shifts. And that short-term overbought condition.
Right. So for you listening, what are the key levels to watch? Where's the battleground?
Okay, critical level for the bulls to defend is $12. That marks the breakout point, and it's also where there's significant option support. They have to hold $12.
And if they do hold $12?
Then a push above the recent high, which was around $13.64, really opens the door towards that big $20 options target everyone's watching.
And the invalidation point, when does the bullish idea break down?
If the stock breaks and, importantly, closes below $12, that would negate the breakout and suggest the bears, the valuation concerns, are taking control.
Okay, crystal clear. So maybe the final provocative thought for you to chew on is this. Is this powerful story, this narrative of transforming a Bitcoin miner into an AI data center play, is that compelling enough to overcome some pretty serious risks? Namely, that big group of short sellers and what looks like a pretty hefty valuation premium.
That really is the key question going forward. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.